Now, I asked you guys a question today on the session, and a lot of you can answer. So we're going back over this one, okay? Are you happy with that? Counter trend trading. Okay, so this works when market changes trend as well. So knowing this information will know when market is changing its trend. Okay. Now I'm going to go big screen. Hopefully it doesn't stop sharing. Oh, yeah, it did. Does it every single time. God, Mr. T! What is going on? I don't understand what's happening. Sorry, guys. I'm trying to figure this out. Why is it not? Oh, it is working now.
All right. Welcome to our counter trend trading bootcamp. So our bootcamp call today here is we're going to talk specifically about how we find some counter trend positions. Okay. Okay. So one thing that's super important, okay, is that we don't tend to trade counter trend, right? Our rules, scalping, and all those things, because I realize we're going to talk about these positions. We're going to talk about them. But I realized in my journey that counter trend positions were most of my losses. So, in order for me to limit the losses in counter trend positions, taking trades counter trend and having to stop losses, supports, and all those other things, in order for me to limit my losses in counter trend position, okay, in counter trend position, I had to create some sort of rules around it. I had to be like, if I'm going to take this counter trend, I want to make sure that some of these things happen.
Is it lagging for anyone else? No, it's not lagging for me either.
Before I take a trade. Okay. I need to make sure that some of these things happen before I take a trade. Okay. So we're going to talk about what those things look like. And something that's very, very, very important is our 238. Okay. I want to find a really good example. I mean, the structure in this is a good example. It was at open. Let's go to yesterday. Okay. Okay, let's go to yesterday to talk about some of these counter trend positions. Okay, so let's do a little replay here. I just want to see where the that. Oh, that's my problem. Let's talk about. Yeah, I'm having trouble with them right now, so just give me a second. Okay. All right. Okay. What we're going to talk about here is we're going to talk about counter trend positions. Okay. And something that's super, 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 super important is is the 238. Now we talk about this a lot in the basic boot camp, but the 238 is essentially our kind of reversal level that when this thing breaks, it's giving you an indication that the trend is ready to switch. This is obviously we see it break. This is a pretty good example, actually. We'll use this example at open. Okay. We did have some news coming here at like kind of 8 o'clock, which we had to be aware of. But I'm gonna talk about this move because there's two very important things that happen here. Okay. So let's just go into replay mode. Okay. Now let's chart catch up. Okay. And this trend actually shifts. So you'll see that here as this starts. So right there it shifted. Okay. So it just shifted. So one thing I want you guys to see, okay, is that I mean the trend just shifted. So it's not the strongest trend yet, right? The trend hasn't held, it hasn't started to create some structure and those sort of things. So that trend, the 15-minute switch, not the best, hardest downtrend because it's brand new. It just switched. And you can see if this was going to be a strong trend, this would break and continue down and you'd have the structure, right? So there's two things that are super advanced that are advanced here. I would say they're super advanced, but this is what you're going to get comfortable with when you're starting to watch this. Okay. So when we're looking for trends, the first thing I need you guys to identify is the chart needs to stop. So what I mean by that is you can see we had this big old bouncing around here and then this thing fell out. So something that's super important that you need to identify first, okay, is the chart needs to stop the direction it's going, right? We want to see it move the other direction. So, right, we get this big drop out of here, 580 all the way down to 380 at 200 pip fall. Like, you go look at it. Look how aggressive that drop is, right? But on the one, we want to see this chart stop falling. That means it creates a support area, right? You can see this support line right here. It creates a support line and it holds. What it does is it starts to break the candles and engulf the candles upwards. Right? So if anybody was actually on my call this morning, this started to happen and I was like, okay, once it starts to break above here, I'm going to get off the sell because we were looking for our opportunity to join this thing, but it started to tell me that it had held this space and was starting to break back up. And so you can see in this type of pattern needs to happen first. What it needs to do is it needs to stop, right? You get this, bounces up here, bounces here, bam, and then it stops, as you can see, up, down, breaks a little higher, down, and then finally breaks kind of out of this zone, right? Then we'd want to see another little pullback, and then it start to push back up, right? So this has to happen first. This tells you, and it's not 100%, right? This could also just be slowing down to grab some volume to continue down, right? But you need to see this structure start to happen. It's the first part of it. When you see that, you're like, okay, maybe this thing doesn't want to actually continue to fall. It actually wants to reverse. And you're going to let the candles tell you what's happening, right? This up and down, this up and down. It's not making lower lows and lower lows and lower lows. It's actually creating little higher highs. Then it breaks through the 238, pushes back to this structure. Then eventually it breaks up through this, right? So now if we wanted to buy this, we would be counter trend. If this was blue and the trend was still up, we probably would have a little bit of a better position, maybe at this 50, which is another scanner, but maybe at this 50, breaking back up. This is the first thing you want to see. You want to see the chart, and I talk about this on some of my calls, and people are like, what do you mean? I want to see the movement stop. I wanted to see, you literally whipped here 620 all the way down here to 360. You got a 260 pip movement, right? In around an hour, which is a pretty strong move. You want to see that fall stop. You don't want to see it like kind of drop below and create lower lows and create lower lows. You don't want to see that. Okay? So pushing up here, you want to see it stop. This is the first part of the structure you want to see. Okay, so there's two options coming out of this. We're going to take this off the chart now, so everybody wants to see this movement, right? You want to see this chart to stop dropping, right? If we're looking for a reversal up, we want to see it stop dropping. If we're looking for a reversal down, we want to see it stop going up. That means it stops breaking these highs and stop creating highs. And this, it stops creating lows. That means the buyers are slowing this down and they're starting to take a little bit of control of it. Right? Okay? So we want to see this set itself out. We want to see it start to show you this structure. Okay? I'm going to leave that little box up there so you can see it. Right? You can see this thing creates a little support zone. Rather than just a little support line, it creates a zone here where it's just going up and down and up and down and up and down. What does that mean when the chart's doing that? It's pulling in volume to go one of the directions. So now you're like, okay, it's pulling in volume here, and either it's just slowing down to grab some buyers to continue on its movement, or we're going to see if it wants to start to push back up. And some of these things can tell us about a counter trend. Right? So first things first, it creates this space. Okay, creates this. The drop has stopped. It's now holding. I'm like, okay, I might be interested in a counter trend position here now because the chart has started to hold itself. It's holding in one spot. Okay, so bouncing around, but holding this spot. Okay, so, and then it pushes and starts to create these higher highs. Now it starts to create upward structure. And I know that upward structure on the one is not always the strongest, but it starts to create upward structure. Now, what do I mean by that? So after it slows down, it starts to break these highs. See this little previous candle? Gulps it up, right? Pulls back down. Then breaks it again. Not only does it break the 20, but it also breaks all these previous highs and comes right back to this level, right? It starts to create structure upwards, right? So it's super important to see that now it's held this space and now it's starting to create some upward structure. Right, so let's see what it does here after. And just remember this is like rated open, so pretty volatile candles in here. Right? Look at that. It breaks all this structure, pulls back down into it. Right? So what it's doing is it's creating this upward structure. And we'll let this thing play out a little bit more so you can continue to see this upward structure. Right? This upward structure keeps moving. Right? It breaks this level. Right? Breaks this level, breaks that level here, breaks the 50, gets back over here, pulls back and creates what? What does it create? Right here. Creates a higher low. So you know now that the buyers, creates a higher low, which now you know on the 1 minute it held this space. Now it's creating structure as it wants to go up. It created a higher low. It broke this high. Right? So now you're back up to this space. So all these things, very, very important for you to get comfortable with the candles and see the structure. Okay? See the structure moving itself, right? The right direction. Okay? So now you can see all that structure pushing that direction. Okay? So after you see that structure, this is the most important part. And normally, okay, normally we want to see this in signal first. Now we know that this is quite impulsive, and if it is going a bit slower, we probably would have got our signal in here before we broke that 238. Didn't. I'm still okay with the entry at the 238, and anybody who's at my call knows that that entry was there. So now you've got your structure. You've seen it stop the dropping. It's now giving you on the 1 minute this structure up. The last thing you needed to do is break this 238. Now, one thing that we would have liked to have seen is this POC to have moved down to this space. Didn't. And we would like to be in signal. So it's not the perfect counter trend move, but this goes against all our other rules of Kiltro. So we need to see these things. We need to be patient with them. We need to know that this is starting to happen, and then we need to protect it as it comes. So one thing we're going to do in here, when we are taking trades outside of our signals, okay? We're taking trades outside of our signals, and I'm going to talk here on Friday about inverse risk reward, okay? Okay? Is that you will not survive here. You will not survive a small 25 pip stop loss here. You won't survive it. You might, but more than likely not. Because if you look at this structure, if this was even to pull back, right? If this was even to pull back here, it's probably going to come back to this space, right? Your EMAs are down here, pull back to the averages, get pushed away from them. Even if it comes halfway to those EMAs, your 25 pip stop loss is done. And then it, of course, goes this direction. Gives you everything you were looking for because you didn't kind of wait for that sniper. So one thing you can do and be patient with these 238 breaks is just wait for a pullback off. Right? And then join it. You can see it kind of bounces around here, rips its way through. Okay? Now, you must jam these trades. These trades are not on our rules. They're not on our high probabilities. Do we have some rules that help us with the probability of this trade? Sure, we do. But we must jam this chart for two reasons. If we were to go back to these EMAs, stop loss is 60, 70 pips, which means our 1-to-1 is up here somewhere, right? This is not a normal stop loss. The risk is bigger. So yes, of course, we want to get that reward bigger as well, but we can't hold a trade with a really big stop loss. We just can't, right? Even just to get back behind your EMAs or any of that stuff, you're looking at 100 to 80 pips, unless your lot size is much smaller than normal. You still have to have about a 1% risk. I don't want you, to be up here and your 1% is 25 and you're like, oh, I'll risk 4% this time. No, we keep our risk reward the way it's supposed to be. We drop our lot size and we give ourselves the kind of the 1-to-1 back behind these EMAs, right? And then the last thing is you absolutely must jam your stop loss. Now, we can play this a little bit. It probably will wick you out, which we did this at open, right? Which it did wick us out, right? Pulls into this signal, right? You had, if you did take this thing, you had a 50 pip TP on the board, right? And most of us are going to move that stop loss, drop it in here, right? Right? Are going to drop it in here and get, 10, 20, 30 pips. But these are bonus entries. So everything I'm showing you here with advanced trading strategies are bonus. That means if the market wants to give us a little bit, we're going to take it. We're not going to try and push and force more out of it. We're going to take it. Okay? We're going to take that opportunity. We're going to take the opportunity to get some pips out of this move. It goes all the way to 50. You had a trailing stop. Maybe you got 30, 40 out of this. Maybe you trailed early and got 10, 15 out of it, but you've got some pips out of it. Okay? So the steps of a counter trend trade. I'm going to type them out here for you. Okay? Okay? We'll go see if we can find another example because we got a little bit more time here. But I'm going to write them out for you. Okay? So the first thing is we talked about this zone. The market must stop. I like to say, put on the brakes. Okay? Right? It must stop the current trend. Like you don't want to try and take a counter trend trade if this thing's still creating lower lows. Because the trend's not over. Right? We're really trying to find the end of the trend. Right? And lots of people are taking these, and you got your smart money conceptors and all those people who are just trying to enter in these zones. They'll take lots of losses because this zone can be a slowdown to continuing. We need to see some of these steps to let us know that, hey, the potential of this reversing now are really good. Okay, so first you got to see that box. The market must stop. Right? We want to see this thing stop creating lower lows, start creating higher highs. Right? We want to see this structure start. We want to see that happen. So first, the market must stop. It must stop its trend. Right? If you're going to try and take counter trend, you want to know the trend has stopped, or at least is attempting to slow down so the other volume can maybe take some control of it. Right? Because if it hasn't, then the sellers are just looking for a pullback. Right? They're just looking for a pullback to continue on, to grab some more volume and continue on, which we know we were looking for this. We were looking for that pullback, right? We didn't get that pullback. Structure started to tell us up, and I was like, okay, I'm off the sell. This is starting to tell me that it wants to back up. So first thing we want to see is the market must stop. Okay. Second thing is 1 minute structure shift. Okay. 1 minute structure shift. That means you see it start to create higher highs and to create higher lows, right? Higher highs, higher lows. That means your structure is moving up, right? Right? Lower lows, lower highs. That means your structure is going down, right? This pushes up, breaks a bunch of structure, pulls back, creates its higher low, hits all the way here, creates another higher low. Eventually, ends its kind of move up here and has a bigger pullback. But the structure must shift to the direction you want to go. It must shift from down to the counter move you want. Okay? Then we would want a signal shift. Okay? This isn't always going to happen. And if this wasn't open, you would have got one, right? Just the open move so far in the EMAs. Okay? To the direction we want to go. And you can see they're kind of out of order here on this example. But we want this. We would want this to happen first. It didn't happen first. It was impulsive. We were coming out of open. Okay. Shift to counter trend. Okay. So we want to. It would have been nice if this wasn't open and we weren't getting these big impulsive candles to see this signal down here somewhere. Okay. Then the break is even better because we would have saw this signal down here somewhere. We didn't get that first, but it was another opportunity for confirmation. We got it after we got into this trade, and it was confirmation that we could get a few more pips out of it. Okay. We want to see the signal, the kill shot signal shift to counter trend. Okay. The last thing is we want to break the 238. Okay, that's the last thing for us to enter. We want it to break the 238. And you're probably going to need bigger parameters, and you're probably going to want to enter as it breaks the 238. Right? Would have been whipped into it there. It pulled back on us. That shot up. And maybe you only got 10 pips out of this. Maybe you got 30. Maybe you got 50. But these little bonus entries, adding, another 10 pips here or 20 pips there onto your 20, 30 pips you're getting from maybe kill shot entries, that's what's going to take you from doing, right? That's what's going to take you from doing, 100 pips a week to 170 pips a week, right? Adding those 70 pips a week is going to be a big difference in the end of the month, right? Okay. And we took this one, right? Normally we want to see that signal first, but we knew that signal was coming because these EMAs were sitting right on this trend. So it was okay to get into it before that. The confirmations, these can come in either order, but it's better if we see it first. But it's okay. We got into it here. It was impulsive. We knew we probably could get 10, 20 pips, get protected, which we did. And then the signal came after, which you're like, you're already in this position. I haven't protected yet. It's probably going to pop up a little bit. Maybe I got a better opportunity to pop up and take some pips. Okay, break the 238. And the last thing we're going to do, jam. And I'm going to talk about that again here just for about 5 minutes as we close this down. We'll move into why we jam our stop on all these things. Okay, and like I said, everything I'm showing you here in the advanced is a little bit outside of our fully back-tested probabilities. So our fully back-tested probabilities are the signals that are on trend, the 5 confirmations in Killshot. Okay? Easiest way to make money. And the reason we jam these is because they're actually, we have rules around them. Okay? We have rules around them, but we have the ability to jam our stop loss. Because we're just going to take these trades that are outside of our fully back-tested probabilities. And you can go back-test these as well. And you can see that they can add to the pieces of pips we get each week. Okay? We want to jam our stop loss, right? This is our stop loss, especially because at this 238, especially here, is your risk is big. Right? If you're 1-to-1, your risk is up here. So you want to make sure you're going to take what the market gives you and then not come all the way back down here because it does. It has this big pullback and just about hits this stop loss, right? So we want to make sure we jam our stop to add to our wins, to add to what kill shot got us this week, to add. These are bonuses, and we want to make sure we add. Okay, so those are your rules, your counter trend trade steps. And you know, obviously you guys can add different pieces. There's another scanner in here that helps you get into them a little bit earlier, which you know we'll have to do training on once we get that thing all locked and loaded. But these are the pieces and the questions you need to ask yourself. Did the market stop? Is it ready to push back? Because if it's still breaking and still creating lower lows, is it actually ready to push back? Okay, we want to see that market structure shift. We want to now that we want the structure, although maybe longer term our structure might be telling us it's down or up. We want to see what it's doing in our shorter term. And if our shorter term structure is starting to tell us that maybe it wants to shift, then we have a better opportunity to join that structure as it shifts. Okay. Then we want a kill shot signal. Like I said, these can come in different orders. Normally, you want to see that signal shift first. The reason we didn't get that one here is because it was open. And open's just got more volume in it. On a normal outside of open example, you would have had that signal probably down in here somewhere. Then it would have broke this. Right? Then we want it to break the 238, and then we want to get our stop loss in profit. Okay? We want to get our stop loss in profit. That means we take our stop loss from here and we jam it. We put it into stop, we put it into profit, whether that's taking an extra 5, 10, 20, 30, whatever that is, whatever we're comfortable with, whatever we wanted to hold, right? I would have wanted to break and close that POC would have been is to move our stop loss, right? So that's to jam our stop. Jamming our stop is taking our stop loss, putting it into profit, making it a stop. Instead of it being a stop loss, it's now a stop profit. We're now risk free. The reason I go risk free all the time early in these trades is because they are not fully online with our probabilities. So I'm not taking any extra risk. It's not fully in line with the rules and the parameters, so I'm not taking any extra risk. Okay? So that is how we take counter trend trades. Okay, we only got one example here today. I don't want to go on too long with these trainings, but this is how. These are the steps you need, right? The market must stop moving on trend. It's got to stop. It's got to stop making lower lows or higher highs. So you know that you're like, okay, the counter volume of whatever move just happened is coming into the market. Okay, then we want to see that volume create a market structure shift on the 1 minute. Not too worried about what it's doing on the longer term. We want to be aware of what it's doing on the shorter term. Okay, then we want to see a kill shot signal. We see that kill shot signal. We're like, okay, it stopped. This 1 minute structure is changing. We now got a kill shot signal. Now we got 3 of those things telling us it's probably going to want to push back at least a little bit. And if it pushes back and breaks at 238, now is our opportunity to join it. And I know it's like, why can't we just join it down here and take hundreds of pips? Because we didn't get our confirmations until up here. Okay, and then in order to protect us outside of our normal probabilities, we must jam our stop and take what the market gives us. Okay, all right, that is day 3 of our advanced boot camp, our counter trend trades. 2 more days to go. Thank you guys so much for jumping on. I really hope this is giving you some extra perspective on how to use kill shot to your advantage, how to add, some of these extra bonus entries and kind of take this kill shot stuff kind of to that next level. Okay, so everybody have a wonderful, wonderful day. We'll see you tomorrow for open, and we'll also have day 4 of our advanced boot camp.
All right. The more we watch, the more it makes sense. Yeah, definitely, for sure. I just kind of want to. Oh wow! I knew that was going to happen. Did I not just say that before? I knew. I knew that I knew that I knew that that was going to happen. But why? Oh, what's happened here? Ooh, how has that changed? Yeah, but what the heck is going on? dare do that to me? Is this easy markets? Yeah, easy markets. Right, okay, cool. Let me just quickly change these because I have no idea why that changed. That's easy markets and that's easy markets. All right, cool. Okay, so you got your 3 minute, your 1 minute, right? Yeah, okay, cool. I get it. I get what he's saying. Totally. I do. Now, I mean, really, I should just go on this one, really, shouldn't I? Just have it there. That's a really, really bad example. Okay, now we're talking. Again, terrible examples. Mind you, though, actually, this one is not too bad, okay? Because obviously when market's coming down, it has to pull back to create volume, right? It has to pull back to get volume, and then the market started kind of going up. Obviously, look, I mean, we're on the 1 minute here, so of course that's gonna look, the moves are gonna look like crazy. Like we're kind of, this is like a consolidation phase, yeah? Look, this is pretty much in a consolidation phase, like I showed you on the 15 minute the other day, right? We're kind of semi-consolidating here now, right? As you can see, look, we consolidated here a little bit, here. Anyway, regardless of that, now look at that. Massive, massive downtrend, huge bloody downtrend. Look at that. Yeah. And you can kind of tell when gold is going to do it. Because remember when we was on our session and I said, it needs to come out of this zone. It is just sitting in this zone. And then it started doing this. And then all of a sudden, it just dropped and dropped. Imagine being in at the top there. No, not there. Because you're on the 1 minute, aren't we? It looks worse. Like, yeah, sorry. From up here. But anyway, my point is, there's a lot of opportunity, especially when you do have your chart out like this as well, right? You don't have to do what I do and how I have my chart, right? You really don't, okay? Have your chart in however you feel comfortable having it. You can have different screens, so you can save different charts. Now, Carl is going to go over how to do that. So you can literally flick between different charts, right? Okay, literally, okay, and you can save your charts. So currently, this is a saved chart, right? This is a saved chart, okay? This is a saved chart. As you can see up the top here, it's got 1, 30, 15, and whatnot, right? And then you've got this one. I was messing around with the white screen, right? But my point is, you can save the charts, okay? Literally. All right? As you can see, messing around. All right? So, anyway, I need to sort this one out big time. But my point is you can save them. Okay. Now, this right here is a pretty good example of a counter trend, right? As you can see, it dropped, it hit this level here, it busted right up here, came down even further, right? And then came up, but didn't quite come up. Like, if it was going to change here, then this would have come up higher, right? But it didn't. It came up, came back down, but it didn't come down as far as here. It came down to here. Slightly came up, came back down, but didn't really quite take that out. You see? So this is a structural change. Yeah? It's a change of structure right here. Right? Then it came up and it took out this zone here. Right? It took out that zone there. Just make it bigger for you guys so you can see what I'm referring to. So, yeah, it took out this area here and took out this here, right? This candle here, yeah? Came up here. Then it dropped down a little bit, hit the 50 EMA, bounced off it, come back down, didn't take out this zone here, and then shifted. This would have been your entry. Like, for me personally, myself personally, this would have been my entry. Right above this zone here. And then I would have taken it and followed up my stop, right? So this would have been roughly my TP right here, okay? Now, I would have put my SL just slightly, I would say, below well, you know me, I pull my stop straight up anyway, right? So I would have started quite small with my stop and pulled my stop up, right? In a situation like this would have been my entry for that trade, okay? Because I'll be honest, I don't want to wait. Like, I don't want to just wait and get what? Look at that. From 26 to what is that there? Exactly. And just pull up the stop. 20, oh, goodness, you can't see because that's in the way. 26 to 44, right? I would have had to have waited for it to come and take out this. Then I would have probably got in a bit up here. So I wouldn't have got much in that trade. It's not a lot, right? So this is how I would have done it. I would have entered and I would have just trailed my stop immediately. I would have simply trailed my stop. So I would have got in here, would have got in just above this line here, as you know me with my lines. And then as the market's pushing, I would set my stop. I would literally set my stop just above profit. And then once I've set it, I then click it again and I would just slowly follow it up, but I would stretch out my candles to give me more room in the market, right? Because if you have your candles all scrunched up, right, look at that. You can't even see in between. So you're missing pips because you haven't got the room. You haven't got the room to move it. So what you do is you stretch it out as far as you can on your phone. And then you get in You wait for it to bust up through this, because look, this was created, right? So you wait for it to come back up through here. You can see that there's a shift in momentum here. You can see there's a structural shift. You can see that it's creating new higher highs and lower lows, right? Higher lows, lower highs, higher lows, right? You can see that it's doing that. You can see that the buyers are trying to come in and push it. Buyers are trying to push it up, right? You can see that. So you wait for it to break, and then you literally set your stop just slightly above profit. And then as it moves up, because along the way of this candle, it's going to go up, down, up, down, 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 up, down, 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 up, down, down, up, down, down, up. You see what I'm saying? Right? So you just slowly follow it, right? Wait for it to go into profit, set it. If you get pulled out, doesn't matter, get back in, wait for the move, right? You know that the market, when it breaks and it ain't come back through, it's going up, right? It's going to go up, okay? So you would just follow your stop along the way, right? Now, if you had done that, you could have got in here at 5,883, 5,883, chased it up, 5,8, 590, 683, all the way up to boom, shakalaka boom. Look at that. You see? Now, for me, I think that's a better position. If we get stopped in profit. Yeah, exactly. So same rules, but enter earlier as it breaks the SR level to gain extra pips and fall. Yeah, exactly. Exactly that, because that is how we trade all the time on our sessions, right? Literally, that's how we trade all the time on our sessions. So, you know, we could have took, if we really thought about it properly, look, okay, could have waited for the break here, right? Waited for the break here. Just put it slightly below it. Slightly below if you want, if you really want to. You know me, I just get in and I immediately pull my stop, right? I literally immediately pull my stop, okay? So we could have took this all the way down, back down here. If you want to trade kill shot like that, just like this on the 1 minute time frame, you could literally go from here to 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 here. Like, do you see what I'm saying? Do you get me, family? That's how bloody simple it is. Right? Could have got out there. Oh, look, we could have got back in. Look. This is how we trade. When you put it in perspective like this, right? This is how we trade. Yeah, we get in, pull up our stop. Here, we would have got stopped out about there. Nice. Pulled up our stop. Pulled up our stop. Oh, look at that. Where are our stop losses? Right? And then, you see, could have entered on the break of this one here. Right? I'm just putting into perspective, family, our calls, right? We could have got in at the break of this one here, which is this purple line, right? The break of this one, boom. Oh, look at that. Down to here. Nice, another nice little trade. Oh, sorry. Another nice little trade right there. Bish, bash, bosh. See? That is that easy, family. You see, when we're on our sessions, if we really wanted to go all out on our sessions, we could go up, down, up, down, up, down. Could have got another nice little push up here, another nice little pull down here. You see? Could have waited for it to break here. Shifted momentum here. Okay, it didn't quite take out this previous high. Shifted momentum, come down. This is how we're trading on my sessions. So like, okay, so let me delete these. This is how people make money on my sessions every day, right? Every single day. Right? Look, for example, this was the first position I said we could have got in. Can you see that line there? Now me, I like to create my lines. And if I know that it's a 4-hour line, because I've done one on the 4-hour chart, then when it breaks it, just like I showed everyone today, let me go back and show you an example. Right. I literally put information in the chat today. And I said, family, look, forget the purple lines, ignore the purples, right? I literally put a picture in. These were my zones. I was saying about a sell, right? These were my zones. Even if you had have got in at the break of this, all the way down here, the break of this, all the way down here, the break of this, all the way down here, right? These are my lines. These are my 4-hour lines, right? With not which, huh? Just trading the green and red stars, which and minimal stop loss. Well, I don't know. Depends your account and your risk management, my lovely. So let's go back. So even if you wanted to, you could just use the 1-minute chart, but they might not be as strong, but they do seem to be, right? So you wait for the break here. If you are waiting for that structural change, you can see, look, it's gone from solid down to, look, messy. It's messy, but guess what? It stayed in alignment with this. Look, now let me show you something. What am I looking for right now? I'll tell you what I am. Oh no, it's down here. Look. Right, look. I hate when it does that. I'm just trying to give you an example, right? Look. It didn't come back down. Yeah, it didn't come down. It didn't break this and it didn't break this, right? So therefore, it was inevitable that it was going to go and hit this zone here. Just more. Ugh. These bloody things, they annoy me. Just more here, right? But it hit that price. Now, you see? It hit that price there, didn't it? Do you see? From here. This here. It went and hit that price, didn't it? Do you see what I'm saying? Is this making sense? It went and hit that line. Yeah? So when you see a shift in momentum like this, look at it. Look at where price could potentially move to. So we could have took a trade to this price line and this one. But when you're trading the way that we're trading, so you could have actually got into a trade here. Yes, you would have pulled back. You would have probably got nervous thinking, oh my gosh, I've just got into this trade. It's pulling back. But when you see a shift like this, and you can see that it's creating different move, like high, lower, low. Do you see what I mean, right? So, I would have got in at the break of this here line. Now, before that line, what am I looking for on an upward trend or a change in direction? I'm looking for the cross of the EMAs. Yeah? So once I see the cross of the EMAs, I know that market's going to go up, right? It's going to go up. So I need to wait for it to break this zone. Once it breaks that zone, right, I'm in. Then, look, we got a buy signal. We got the buy signal. So we could have taken it all the way up. Does that make sense, family? Please tell me if it makes sense to you. Yeah? It's that simple, guys. When you look, all you are looking at is you are looking at patterns, right? You are looking at a change, right? You are looking at a shift in character, shifting like a shift in character, right? It's going good here, starts to go a little bit sketchy here. Do you know what I mean? Like, I don't know, just the way I look at the market, you just look at it, you can see it didn't quite break this here at this right point there. So if we had drew out this line, right, when we see the red candle stop here, we could have drew that line there and you would have seen, okay, look, it didn't break here. It didn't break here. So that then tells me that we're about to get a shift to the upper side. Now, look, if I'd have got taken out in stop profit here, I would have got back in. I would have got back in. Look, we had a shift. It broke the previous high. It broke the previous high. It broke that. It broke that. It broke this. It broke this. It broke this. You see? It broke this. It broke this. You remember? To the left, to the left. Everybody gotta look to the left. Don't give up your trading job. I'm joking. Sorry. Right. Yeah, that's it. Look. Look at what is in front of you. Look. Please look. It's telling you what it's doing. Hey, does that make sense? That was a solid move up. Therefore, look, you would have got the buy signal. All right, cool. If I got stopped out here, fine. Let me get back in. Right? And if you have my lines marked out, and there's a line right here, right here, and it breaks that line, boom. And the buy signal comes in, boom. I'm getting back in, boom. Yes, and the 15. Mark, and the 15. Sorry, but not to me. I feel I'd re-enter once it breaks another line just to be sure. Okay, that's fine. Look, you would want, this is what I'm saying. Look, there's your next line. Because remember, right, this hasn't even happened yet. None of this hadn't even happened yet, right? So forget about what you see beyond this green candle here or this one here. Forget about that. Look, right? Oh, look. 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 You see? Look. When you look, you see. When you look, you see. Remember, this one wasn't here yet. But these ones were. Right? This one, this little teeny bot one hiding there. See? So you look to the left. Look. So all you got to do is just look. So look, right? We enter on the break here. Pull up your stop. Okay, you get taken out. Fine. Let's enter on the break here. Oh, look, the buy signal comes in. Boom, I'm getting back in. Enter on the break here. Boom, let's go back up. Oh, look, there's another line. Enter on the break here. Let it go back up. Enter on the break, let it go up. Enter on the break, let it go up. Enter on the break, let it go up. You see? Nope, you said it manually. You just click on the page on your MT5. On your MetaTrader 5, you will have your trade that you've opened on your screen. Okay? And then you click it, it will bring you your SL and your TP at the bottom. Okay? So if you want to be more sure about it, all you got to do is look and see what market has produced here. You can see loads of them. Now, if you're operating on the 1 minute time frame, but you're not trading it, remember, we are not trading the 1 minute time frame, but we are using the 1 minute time frame as our guide, as our base to see what market is doing. Okay? So you use these on the 1 minute. No, it's not automatic. It's not automatic. It's just like simply like you enter the trade, you click the trade, and then you pull your stop up immediately. I trade the 3 minute on my chart. On my MetaTrader, I always trade an odd time frame. Right? If I was a 5 minute trader, I'd trade the 10 minute time frame. If I was a 15 minute trader, right, I would trade the 20 minute time frame. 30 minute, 45. 1 hour, I'd trade the 2. You see? I've always been an odd time frame trader. Yeah? Because the 3 is more stable than the 1. Right? And it's kind of in between the 1 and the 5. The 10 is more stable than the 5. Yeah? You see what I mean? Yeah, it does, definitely. See, like I love the 3 minute. I've tried all different time frames. I always said you were odd, right? How do you kick someone off the call? Let me just go and delete Jason off the call. I'm only joking, Jason. Right? But does that make sense, family? Right? So you're looking for a change in pattern. And then you've got your lines marked out, or you haven't, whatever you do, and wait for these breaks. You can see it breaks them all. This was all created coming down. Yeah? All of it was created coming down. So therefore, we now need to break it. Why? Because it was created coming down, so it creates it. So now we have to break it again. Remember that. You do not have to look at trading as difficult. You just have to look to the left. Simply to the left. Let me show you one more thing. Right? Let me show you this. How did Caroline know? And I mean, right? How did Caroline know? And this isn't lookatme.com, you know, blah, 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 blah. It's none of that, right? But I told you, trading is my niche, guys. Trading is my niche, right? It is my niche, right? Now, I know there's a lot of lines on here. I know there is. Try to ignore it, right? Now, I looked at the market. I looked at the 1, the 2, I looked at the 3, and then I looked at the 4. I could see that market was pulling down, right? So I looked at these zones here. Yeah, I looked. But I also looked on the 3 and the 2 and the 1, right? To see what was happening in this area, okay? This here area. Now, as you can see, order block, fair value gap, above fair value gap, above the fair value gap, right? So what I did is I saw, because I was saying it, I swear I saw a fair value gap. There was a fair value gap, right? Here and here. I saw this. I could see the momentum coming down. I saw this. Look at the size of that, right? I saw this and I saw this, right? I knew market was going to come to this zone, this zone, this zone, and this zone. My TP was smack bang on that purple zone, right? I saw, I looked, I could see it tried to break, came back down, tried to break, came back down, tried to break, came back down, and then bosh, right? It flew up, yeah? So then I looked on the smaller time frames and look, it flew up. So I knew that from that zone, it was a very, very strong zone because look at what market did. Look, it flew all the way up to 5.5, right? Then it came down. Look at what it did. It dropped, right? So I knew that this here was a strong zone. So therefore, I knew that market was going to come back down to this zone. Yeah? Does that make sense? Does that make sense, family? Please tell me if it does or doesn't. Hello? Is anybody there? Guys, does that make sense or not? Perfect? Yes? Yes? A little? Okay. Well, Peter, the more you join these, the more it's all going to make sense to you, I promise you. Okay? My goal is to see multiple millionaires coming out of this community. I'm telling you now. And I get what I want. All right? Just saying. I always get what I want. And that is what I want because it's written in my affirmations. Okay? I'm telling you, stick with it and you will. Like, I don't know if you've heard me say before, we had a guy, literally in the group. He became a multi-millionaire. And others were making money too. Why? Stuff like this. Learning it. You see? Learning. Right? Sticking with it. I am here to make you win. I want to be able to read the charts like you. I feel like Mystic Meg. And you will. I promise you. What lot size do you recommend per month? Right, okay. Here's the thing. So technically, it's supposed to be 100. 100? Yeah. It's supposed to be per 100 a 0.01, right? Now, if you've got 200, I would still keep it at a 0.01. 300, yeah, 0.02 max. 400, 0.02. 500, 0.02, maximum 3. Okay? I will not go a 0.01 per 100. Now, let's say, for example, you've got a 20, you take 5 trades at a 25 pip stop loss, right? You win them trades. Great, right? You've won, it's a 25 pip stop loss, but it's a 50 pip win, right? So you take 50 pip win 5 times, that's 250 pips, right? But then you go and take another 3 trades at 100 pip stop loss, for example, and all them trades lose. You've lost, you're down another 50 pips, right? So what you do is you adjust your lot size according to the stop as well. So don't be over generous with the lot size until you have a bigger account, okay? But make sure that you have room to adjust the lot size according to the stop loss. Does that make sense? Okay, perfect. Okay, good. Yeah, and that will help you because it's risk management which is going to set you free. Why do you think I'm always pulling up my stop? Because as long as I'm taking pips, I'm making profit. Doesn't matter how much it gives me. Some moves can be 1,000. Some moves can be 300. You saw the results yesterday, right? Some moves can be 200. Some moves can be 70 quid. Some moves can be £12, right? Some moves can be 20. But guess what? It's still pips. Yes, I did exactly that, Mr. K. That is all I did. That is all I did. And then I waited. I waited. Because look, what did we do? Right? I waited. Yeah? So here was my line. Hang on, sorry, wrong. Here, right here. No, hang on. Is it Thursday today? It's Thursday. I'm live on the call. You should be right. So, yeah, I was looking at the market at this here time, right? This here time. Yeah. So I waited for it to break this zone. And then I saw it come and break this zone as well. And you can see I had it marked out, right? You can see I had a little box there marked out, a box of interest also. Okay. Look, we're on the 4-hour, remember. Look. Okay. And then obviously that's when I made my move. Does that make sense? Like, remember, what was we waiting? Where was, did I mark it out on the 30 minutes properly, didn't I? It's 30 minutes, weren't it? I marked it out on. Oh, would you look at that? I'm joking. Wednesday, Thursday, here. Right? Where was it? Where's the little thing? So look, remember when it came out of here? Remember when it came out of this zone here and I said, we need to get out of this zone. We're consolidating like crazy, right? Why was we consolidating like crazy? Because guess what? Market was waiting to make a move because look, it was producing pretty much equal. Look, equal. All right? It was waiting for it to make a move out of this zone. It was consolidating since the Friday. So I knew that if we got that break out past this here, we were going down, right? What did I do? I looked to the left. I looked to see what I could see, okay? And that's how I knew that market was going to go busting all the way down. But then when we broke, got to shoot, but thank you. I've learned loads in the last 20 minutes. Put it into practice tomorrow. Perfect. Perfecto, 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 right? So it's all about breaking certain zones, guys. When market breaks certain zones, you know what it's going to do, especially when it's on a downtrend. Remember, the trend is your friend, and that is not just, right, when it comes to taking trades. But the trend is your friend, all right, for knowing where market is going to go to. Now, remember this piece of information. Or let me ask you this question. What does market do? Yes, it repeats. But what does it do? Yeah, I'm going to end it in a minute. What does it do? Because there's another call in like 4 minutes. What does market do? What do the markets do? They do one thing to do another. Shut up, Jace. Seriously. Right? What does it do? It does one thing to go ahead and do another. Yes, it buys. Look, it buys to sell, right? Now, when you look through the market, And you can see, like, guys, I'm giving you too much here. I'm only playing, right? But it buys to sell. It buys to sell, right? So you hear this, right? You hear you know this, it buys to sell, right? So you hear this all the time. Oh, yeah, sellers are trying to come in and buyers are doing this. It's all the bloody same, right? They buy to sell. They buy to literally sell. So it wants its money back. Yeah, look, it's like the mafia that is coming for it. It's going to take, right? It's going to take. Yeah? It is going to take. So it buys to sell. What you have to do is look for clues. Look at clues that is left. When big wicks come in, big momentum to the upside, right? It should be leaving big wicks like that. It's coming back for it. Fair value gaps, order blocks. Order blocks. It buys from an order block to sell, to come back to that order block and take its money. Take. So you wait for momentum like this, and you know, look, when market, this is why I gave these four zones. I knew that when it came to this zone, and then it came and smacked out this zone, order block, not far. When it came and smacked out this zone, I knew that I knew it was coming for that order block, and it was not going to go back until it came to the end of that order block. And that's exactly what it did, right? Supply and demand, right? There you go. So, family, has this helped? Has it helped? Perfect. All right. So, guys, we are here to make sure you guys win and understand every inch of this market. Okay. I told you, I'm here to create. Oh, I'm here. Who puts an alarm at 10 p.m. at night? Come on. I'm here to create millionaires. All right. Still confused, but we'll get there. You will get there. Trust me. Oh, thank you. Appreciate that. I like Moan. Yeah, so you will get it, but I'm here to create millionaires. I'm not here to create, small wins and stuff like that. I am here to produce real results, real success, and change the whole trajectory of all of these bloody groups out there, right? These groups out there that just don't give